Are you paying more than $185 a month for Medicare Part B right now? If the answer is yes, you need to stay with me, because there is a very real chance you're being overcharged and have no idea it's happening. The extra amount showing up on your bill is called an IRMAA surcharge. It stands for Income-Related Monthly Adjustment Amount. And in 2026, it is adding anywhere from $70 to nearly $500 on top of the standard Medicare Part B premium every single month for millions of seniors who are paying it based on income figures that no longer reflect what they actually earn. Here is the part that should concern you most. Medicare does not use your current income to calculate this surcharge. They use your tax return from 2 years ago, which means if your income has dropped because you retired, because you sold a property, because you took a distribution, because of any significant life change, Medicare may still be charging you at a higher rate based on money you no longer make, and there is one specific form that fixes it. Most seniors have never heard of it. Before we get into exactly how this works and what to do about it, subscribe to this channel right now and turn on the bell. Here is why this specifically matters for what we are covering today. The IRMAA surcharge, the appeal process, the deadlines, the income thresholds. These numbers change every single year. What applied in 2024 is not the same as what applies in 2026. And when Medicare updates these figures, they do not send you a personal notice explaining what changed and whether it affects you. What I do on this channel is track exactly these kinds of updates, the ones that directly affect how much money comes out of your Social Security check every month, and bring them to you in plain language with specific steps you can take right now. The people subscribed here find out about these changes in time to act on them. The ones who aren't tend to find out after another year of overpayments has already passed. Hit subscribe, turn on the bell, and let's get into it. Let's start with the basics so everything else makes sense. Medicare Part B has a standard monthly premium. In 2026, that standard amount is $185 per month. Most people pay that amount and nothing more. But if your income was above a certain threshold 2 years ago, meaning your 2024 tax return showed income above $106,000 for a single filer, or $212,000 for a married couple filing jointly, Medicare automatically adds a surcharge on top of that $185. No notification, no explanation. It simply appears as a higher deduction from your Social Security check. Here is what those surcharges actually look like in 2026. If your income was between $106,000 and $133,000 as a single filer, your Part B premium is $259.70 per month. That is $74.70 extra every single month. Between $133,000 and $167,000, your premium jumps to $370.10 per month, $185 extra every month. Between $167,000 and $200,000, you are paying $480.90 per month, nearly $300 extra every single month. Above $200,000 as a single filer, your premium reaches $591.90 per month, more than $400 extra every month on top of the standard rate. Over a full year, even the lowest IRMAA bracket costs you an extra $896. The highest bracket costs you an extra $4,884 per year, coming directly out of your Social Security before you ever see it. This is the part that catches most people completely off guard. Medicare does not look at what you earn right now. They look at what the IRS reported for your income 2 years ago. That is the number they use to set your current premium. It is called the look-back period, and it creates a very specific problem for people whose income has changed significantly. Think about what can happen in 2 years. If you retire, your income drops from $140,000 a year to $45,000 in Social Security and retirement distributions. But Medicare is still charging you based on that $140,000, because that is what your tax return showed 2 years ago. You sell a property. That sale puts you in a high-income bracket for 1 year only. But Medicare uses that 1-year spike to set your premiums for the following 2 years. You do a Roth conversion, a smart financial move that temporarily inflates your reported income. Medicare sees that number and places you in a higher surcharge bracket. For 2 years after the fact, you experience a divorce, a death of a spouse, a job loss. Your income changes dramatically. Medicare is still billing you based on the old number. In every one of these situations, you are paying a surcharge based on income that no longer exists, and Medicare will continue charging you at that rate until you tell them otherwise. The form is called the SSA 44. Its official name is the Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event Form, and it exists for exactly the situations I just described. Here is what it does. It allows you to request that Medicare use a more recent tax year or a current income estimate instead of the 2-year-old figure they are currently using to calculate your surcharge. If approved, your premium gets recalculated based on your actual current income, and the overcharge stops. The life-changing events that qualify you to file this form include marriage or divorce, death of a spouse, you or your spouse stopping work or reducing work hours significantly, you or your spouse losing income-producing property due to a disaster or other event beyond your control, you or your spouse experiencing a loss of pension income, and employer settlement payments, such as those from a company closing or layoffs that inflated your income in a prior year. To file the SSA 44, you will need documentation supporting your life-changing event. If you retired, that means a letter from your employer confirming your retirement date. If you lost a spouse, a death certificate. If your income dropped due to reduced hours, a statement showing the change. You will also need your most recent tax return, or a current income estimate if your most recent return still reflects the higher amount. You can download the SSA 44 directly from ssa.gov. You submit it in person at your local Social Security office or by mail. Do not try to file this over the phone. SSA requires written documentation for IRMAA appeals, and phone calls do not start the formal process. This is where people lose money they cannot get back. IRMAA surcharges can be appealed going back, but only within a specific window. If you are currently being charged an IRMAA surcharge, and you believe it is based on income that no longer reflects your situation, the time to act is now, not next year, not after your next tax filing. Here is why timing matters so specifically. Once a surcharge year closes, your ability to recoup those overpayments becomes extremely limited. Medicare does not automatically retroactively refund surcharges you paid in years where you qualified for an appeal but never filed one. If you retired in 2023 and your income dropped significantly, but you never filed the SSA 44, and you have been paying an elevated IRMAA surcharge for 2024 and 2025, that money is effectively gone. The appeal process going forward will correct your 2026 premium, but it will not go back and recover what you already paid in prior years. Without a formal appeal filed within the correct window, file as soon as the qualifying event occurs. Do not wait for the next tax season. Do not wait until your annual Medicare review. The moment your income changes due to a qualifying life event, that is when the clock starts. If you are not sure whether you are currently paying an IRMAA surcharge, here is exactly how to find out. First, look at your Social Security benefit statement or your Medicare premium notice. The standard Part B premium in 2026 is $185 per month. If the amount being deducted is higher than $185, you are paying an IRMAA surcharge. Second, you can call Social Security directly at 1-800-772-1213 and ask them to confirm what income year was used to calculate your current Medicare premium and what surcharge tier you are in. Write down the name of the representative, the date of the call, and exactly what they tell you. Third, log into your My Social Security account at ssa.gov. Under your benefit details, you will see your current Medicare premium deduction. If it does not match the standard $185, the difference is your surcharge. Once you confirm you are paying a surcharge, The next question is whether your income has changed enough since that look-back year to qualify for an appeal. If it has, and you experienced one of the qualifying life events I listed, your next step is the SSA 44. Here is the full picture. Medicare Part B has a standard premium of $185 per month in 2026. If you are paying more than that, the extra amount is an IRMAA surcharge calculated using your income from 2 years ago, not your income today. If your income has dropped since that look-back year due to retirement, a property sale, a Roth conversion, a death of a spouse, a divorce, or any other qualifying life-changing event, you may be overpaying by anywhere from $70 to nearly $500 every single month. The form that corrects it is the SSA 44. You can download it at ssa.gov. You submit it with documentation of your qualifying life event. And once approved, your premium gets recalculated based on your actual current income. Do not wait. Do not assume Medicare will catch this on their own. They will not. The surcharge will continue at the elevated rate until you file that form, and they update your record. Check your current premium today. If it is above $185, find out why. And if you qualify for an appeal, file the SSA 44 now while the window is still open. Subscribe. Share this with someone you know who is on Medicare, and I'll see you in the next one.